The US dollar has long been seen as the unofficial world's reserve currency. But just why is that? And could things be about to change with a crash coming for the US dollar in the rest of 2020? I thought we'd take a look at the US dollar index in this video, talk about why the dollar has been held in such high regard for decades, how that might change and what the opportunity might be over the next sort of 3 to 6 months for the US dollar. This is the dollar index. You can see it's a pretty volatile market. I'll talk a bit more about how it's made up, but we did see it sell off sharply at the start of the coronavirus pandemic spreading around the world. Then we saw this bounce back as plenty of people were looking for a safe haven, a safe destination for their cash. I think it's a really interesting market. It's one that isn't talked about much. So I'm going to talk a bit more about the dollar, its place as the reserve currency, and the dollar index to trade. Then we'll come back and get a trade on. Hello, I'm David Jones from Capital.com. And I thought it would be interesting to do perhaps a slightly different video this time around, taking a look at the US dollar. And there are 3 questions I'm going to try and answer in this video. First of all, why is the US dollar treated as the world's reserve currency? Are we going to see a crash for the dollar as 2020 goes on? And finally, what's the best way of trading it? And we're going to look at a market I think that plenty of people hardly ever look at, but it is the best way of trading the US dollar. So let's get into it. Just a quick one as usual. If you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out lots of varied content like this in the months ahead. So let's talk about why has the dollar been so strong and why is it seen as the world's reserve currency? A quick history lesson. We need to go back to 1971. That's when the US government made the cut, separating the US dollar from gold, from the price of gold, and in effect created the market we have today in foreign exchange, where we have floating currency exchange values between the dollar and a whole host of world currencies, of course. But even before that, it was seen as the world's reserve currency. And it's not really surprising, I think, why the dollar has that position. It is the world's largest economy, and I think it is seen as politically and economically stable, despite perhaps the changes in politics over the years and crashes such as the financial crisis. It's still seen as a stable currency. And we can see that if we look out to the wider market. The vast majority of foreign exchange transactions in the world's FX markets involve the US dollar. It's almost 90% of transactions have the dollar on one side of that trade. And of course, if we branch it out from foreign exchange markets, the dollar is still the benchmark. You know, if you look at 2 major commodities, gold and oil, yes, they can be priced in other currencies, but the market benchmark is the US dollar. We saw there on the chart how the dollar has performed in recent months, and you saw it rallied fairly strongly in the first days and weeks of the coronavirus pandemic really starting to spread. So in times of trouble, investors around the world were looking for a safe haven, and the US dollar played its part. And that's also the case from a central bank point of view. At the end of 2019, central banks around the world, 60% of their foreign exchange holdings were in US dollars. So it is seen as the world's reserve currency. But could this change? Could we see an alternative come up in the next few years, few decades that impacts on the US dollar strength? The single European currency, the euro, has been talked about over the years as a potential replacement for the US dollar as the world's reserve currency. If we go back to the foreign exchange markets, the euro is the next widest traded after the US dollar, and it's also the next one that's held in most volume by central banks, although it's still quite a way off the US dollar. But perhaps the disparateness of economies that we have in the Eurozone, the challenges faced by the European economies, over the last year and going forward, it makes it, I think, fairly unlikely that the euro is going to challenge the US dollar's dominance anytime soon. Further into the future, the Chinese renminbi, Chinese currency, is talked about as a potential replacement. And of course, that could happen as economies change. But at the moment, even though it has grown in reserves for central banks, it's still only about 2% of central banks' reserves. So I think, again, that threatening the US dollar is a long way away. And finally, cryptocurrencies. I think plenty of fans of cryptocurrencies see them as a real alternative to fiat going forward. But I think, again, that's a long way off, if ever we're going to see that happen. And I think there are two problems here. I think, first of all, the fact they're still not widely used in the wider world as part of commerce and business, plus the sheer volatility. If we look at something like euro US dollar, it has its volatile moves, but it's nowhere near the volatility of something like Bitcoin versus the US dollar. So I think if you're hanging on for Bitcoin to be the world's reserve currency, I think you're going to have to need quite a bit more patience on that one as well. So let's talk about the potential for a crash. Let's say we're going to stick with the dollar as the world's reserve currency. Are we going to see a crash as 2020 unfolds? We know that plenty of countries around the world carry significant amounts of debt. The US is no exception to this. The debt at the moment is at $25 trillion and rising. I'm sure it's surpassed that by the time you watch this video. And by the end of the year, the debt is expected to be more than the GDP of the US. At the moment, we've hit that number in the UK already. So increase of national debt could be a problem. But the counter argument to that, some would say, well, the Federal Reserve can just continue printing US dollars. So I don't think in the short term, at least, the amount of debt, national debt in the US is going to be that much of a worry and help the bearish argument when it comes to the US dollar. Longer term, no one can really agree on what this rising US debt means for the dollar, but perhaps as it continues to increase, it will affect sentiment medium to longer term versus the US dollar, but I don't think that's the catalyst for a dollar crash in the months ahead. So personally, I don't think the dollar's going to crash. So for me, I think the trade at the moment, at least, is to look for short to medium term buying opportunities in the US dollar. But what's the best way of trading this? Do you trade euro, US dollar, dollar yen, pound against the dollar? There's a whole host of foreign exchange pairs you can trade, which brings us to the dollar index. DXY is the symbol on our platform. I think if you have a view on the US dollar, this is really the market to look at, whether you're bearish or bullish. You're expecting falls or rises in the dollar. So the dollar index is the dollar quoted against a basket of other world currencies. So we have the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the British pound, and the Swedish krona. So it's a much more balanced mix rather than quoting the dollar against the euro, the dollar against the pound, although the euro does make up about 58% of this basket. But let's take a look. Let's take a look at this dollar index in more depth, what the short to medium term outlook for the dollar could be against this basket of other currencies, and get a trade set up, which I'm hoping turns out to be a medium term trade for the months ahead. Let's jump back on the platform. So here's the US dollar index going back to 2018. We have seen something of a recovery in the US dollar's fortunes. If we go back to 2017, it ended up being one of the worst years for more than a decade, I think, for the dollar, where it really lost ground. But since then, over the last couple of years, we've seen this market come back. And I think it's interesting, given the volatility that we've had so far this year with the coronavirus. I had to readjust the trend line here. But after coming back off those highs at 104, we're seeing the market hold again above the coronavirus lows, if we call them, in March. And arguably, that's the third touch of the trend line. And I just thought, is it an interesting opportunity down here for the rest of the year? I've said I don't think the US dollar is going to crash. So with it nudging back to where it is now, perhaps we have an opportunity. A quick look at the indicators. Let's just zoom things in. So the RSI down here went oversold on this move back towards the old lows. We've come out of oversold now. The MACD down here, this is still the daily chart we're on. The last buy signal we had was as it was coming off the lows in March, and we've just had a buy signal in the last couple of days. So I do think for dollar bulls, if you think the dollar is going to rally from here, it's an interesting entry point down at these levels. And from a medium term trading point of view, for me, the closest I'd want my stop, we could go below the lows in June. But I think to give the market a bit more wiggle room, it makes more sense to pick up on these early March lows. And these are coming in around 94.60. So if I was placing a trade now, it means my stop loss is going to be maybe not far off, a couple of 100 points away from where I get in. But if we're going to see a rally back to those which are only third week of March highs, that's about 650 points, maybe almost 700 points from where we are now. So I think it's an interesting trade in terms of risk reward. So for me, for the dollar, I'm expecting further recovery. I don't think we're going to move at the same sort of pace we saw in March, but that trend is up. The trend for the last couple of years is still up, and perhaps we will see the market squeeze higher. We haven't taken out those March lows, so for me, it's pretty bullish. I think I'd only start to change the position on the dollar if we did start to lose these March lows, and maybe even more conservatively, the lows from Jan 2019, around about 93.50. So I think 93.50 through to 94.60 is the big support for the dollar. But for now, that trend is still up. Plenty of volatility over the last few months, but nothing's changed that bullish longer term move. Let's get a buy on. So I'm going to buy 77 contracts, where the market's trading now, about 97.25, that sort of area. I'm putting a stop at 94. So actually I've got, a 300 point stop and a bit more on this trade. But as I say, I think it's a medium term trade, I think, for perhaps the next few months, assuming this trend's going to hold. So having a target of 104, 700 points higher than where we are now, still gives me a risk reward of slightly more than 2 to 1. Let's just get that trade on. So we'll see how it turns out. We'll come back to it in the future and track whether this trend is still valid. But I think if you've never looked at the dollar index as a market before, it can help out, strip out, I think, some of the volatility of the pure FX pairs like euro dollar, pound dollar, those sort of markets. That's it for our look at various aspects of the US dollar. I hope you found it useful, but we'll wrap things up there. So from me, David Jones, and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.